Welcome to the Hart Investment Group Weekly Roundup. I'm Scott Goodfellow. This is Ben Hart.
Hello, everybody.
It is March 3rd, 2023. Let's just jump right into it, Ben. The week kind of flew by. What give us the lowdown? What happened this past week?
Lots to go through, but you know that 3 is my favorite number. It's 3/3/23 today.
Really?
Yeah,
Are you having a good day? Is it
having a great day.
meeting your expectations?
Having a great day. It's magical.
Yeah, every day is a great day when you're Ben Hart, eh? All right.
So lots happened this week, but one of my favorite times of the year always is when Berkshire Hathaway comes out with their annual shareholder letter meeting. Always great to read that. So I got a couple things on that to go over. So that was interesting. Obviously, market related. Lots of mixed inflation numbers, and China had good PMI numbers, and so lots of things going on. Had lots of questions this week about what's going to happen next week because the Bank of Canada is meeting next Wednesday, March 8th. So we'll cover that today as well. But yeah, lots continues to go on. We got through the end of our SPE season on Wednesday, and we're quickly into tax season here. So lots of tax questions, documents going out. Most tax slips, like at least the first pass of tax slips, are up on the website now, and people will be getting them in the mail as well. So that's kind of what's taken our time from a what you need perspective, and so that we'll cover probably most of March will be tax.
Yes, it's a busy time for us, right? So should people be anticipating getting things from us or in the mail, or how does that normally work?
Yeah, so most people presently right now are online, online tax things, and there's some people that still want the paper copies. If you did want them, those would be coming out. Some people have received them already. We are sending from our office a gain loss report. So those gain loss reports are coming out from us. If you need one urgently, we've had a few clients that are traveling early or something like that, and they requested them early, so we've been sending them along. So if you need them quickly, let us know. We'll send them out. We do have some clients that like them, in Canadian, US separated. So just let us know how you want them broken down. But most of the tax stuff comes from either online or in the mail.
Gotcha.
Yep.
Okay, back to the world as we know it. Anything that grabbed your eye this last week, or anything additional to what you just covered?
I think certainly there's a couple of banks that came into the purview this week, which Silvergate was one of the banks that raised a lot of capital through crypto, and they had some challenges this week. But the other one that did was Credit Suisse, and so for anyone that's been following Credit Suisse, it's been just a terrible grind lower. They touched a all-time low this week, actually. And it is potentially a systemic risk in the financial system because they are a major player in a lot of counterparties and things like that. And so, I've started to see some things pop up where they say, look, with interest rates at 4 or 5% in certain areas, people are going to start taking money out of their bank accounts. It's not good for the banks. And so, that's what it looked like is happening in Credit Suisse's case. And so they've had to shore up and offer better rates for people to keep their money in their accounts. So certainly some things popping up in the system that's making me pay attention a little bit closer to how the banks are positioned right now.
Awesome.
Hmm.
All right, so why don't you get the slides fired up there? And while you do
All
that,
right.
we'll maybe just mention too, I think a lot of people that get the daily email would have noticed that we changed the format up a little bit there. The reason for that is we wanted a place where we could house all the daily emails, or people can go back if they miss them, they could actually find them. So we set it up more as like a blog. So now as you saw when the daily, it has articles and you can go and find these videos every week. So they'll always be there. You don't have to be searching through your email. You can just go to our blog on our website and all the information will be there. Also, I don't know, today we sent out the invite for this this call as well. We sent out two. Will always be one on Fridays. They'll always be located in the daily for now on. So we probably won't send out the individual emails. So looking for it in that daily email
Right.
from now on.
Yeah.
Uh,
Perfect.
all
That's
right.
been
Well, let's
some-
get. Go ahead.
That's been something you've been cooking in your mind for a while, and now it's being delivered.
Execution. There we go.
That's right. That's it.
Okay, so what do you got for slides? How many? First of all, give us the slide count. How many we got?
I think probably 6 or something like that.
Okay, it's gonna be a long.
The first one is Buffett, of course. So, for anybody that knows me well, I love my candy, and so this gives me some hope that I might live as long as Warren and Charlie, who are 99 and 92 now, as they eat a pile of candy every day. So this is a quote that came out from from the start. He said, "They after else." After all, what he said is that Charlie and him have lived this long because they eat candy and drink Coke every day, pretty much. So there's hope for us if you like that. But really into the serious economic information here. This is just a snapshot. I've been talking a little bit about China for a while, at least for I'd say 9 months, saying, it looks like they were bottoming first. It looked like the economic activity was going to pick up in first quarter, second quarter this year. And really, we've seen the stock market, at least some of the like KBA or KWeb, which is the internet related stocks, have started to pick up quite nicely in China as their economy starts to accelerate. And so this is just a view at the positive divergence with their PMI accelerating. It's a positive divergence that we're seeing with the Chinese economy, one of the few that is accelerating right now. And so then we look at there's still what's happening in the world, and it seems like there's this kind of push back and forth between the economy and jobs and what does it mean and inflation. And so I thought this is an interesting chart that compared PCE, which I'll show you PCE on the next page, and wages tend to follow each other, and we see PCE decelerating. So this is PCE, which is the consumer. This is where they spend their money essentially. And so when we look at it, it shows PCE is decelerating, which probably means wage pressure is decelerating and jobs is starting to job loss is starting to potentially pick up as well. This was a great chart that I saw that came out that was talking about food inflation. And so, as we think about what are the potential risks left in the economy right now, and there has been continued upward pressure in food. And so if you look at what's happening around the world, this is a view of where the kind of the food inflation prices are pushing higher. And, as we think about what are the implications of this, certainly major material implications of this, which could be kind of some tail risks we need to be conscious of. This is a reasonable look at, the world and where the inflation pressures have continued. And then on the flip side of that, we have the Bank of Canada coming out next week. So on Wednesday of next week, they're coming out with their rate announcement. Presently, right now, there is a 0% chance of a rate increase next Wednesday. And that's what the market is pricing in. So you can look at our research or anyone's research, and that's presently what it's telling us. So I'd put that as high as I've ever seen it. And so when we look at why that's the case, this is a two-pager to look at GDI, which is gross domestic income, has weakened dramatically in Q3 and Q4 in Canada. And then if we look at what that means from an inflationary perspective, is we see in the Canadian inflation decelerating quite quickly relative to the US. And this is something that I talked about last year as well. It looked like Canada was going to decelerate first, and that's probably because they tightened first. And so we're seeing that start to play out into the economy right now. So last one, before we go into having more discussions on questions or what's ahead, but I put this in one of the dailies this week, just a snapshot. Fidelity's been posting quite a bit of information just about to crypto and their views and where they think it plays a part in the economy, and they write extensively about the blockchain system. They have some really interesting research. Fidelity, for those of you who don't know it, is one of the few private independent investment houses in the U.S. And so they've come out with their views that they think you need a crypto allocation. Presently, right now, in all their models, it's Bitcoin, but they've put in their prospectus to allow some other crypto exposure within the models. But even from the most conservative all-in-one, what they call it, there's a 1% allocation all the way up to 3% on the growth or all equity on that. So very interesting as we think about it, how it plays out and where it may play a part. Most of the institutions have taken an allocation there as well, and so I think it's important to just think about this is what's happening and the investment world's evolving, and always trying to stay on top of what the changes are. And I thought this was a great a piece that Fidelity put out recently, and the ETFs are available as well. So quite interesting. And that's all I have on these slides this week.
Great. Okay, good ones this week. Good for you. Well curated, Ben. Well curated.
Thanks.
All right. As always, if you have any questions, just put it down in the Q&A tab there. That'd be great. We'll get to them promptly. All right, let's wrap it up. What do we see in the crystal ball for next week?
So I think the biggest economic point is next Wednesday when the Bank of Canada meets. So we'll see what happens. As I say, presently right now, priced in the market is 0% chance of a rate increase. Whether that happens or not, I guess we'll see. If they do raise, market reaction. If they do cut, market reaction. Presently right now, hold is what is priced in. And so had quite a few questions this week about rates, and so I think that still plays a major part. I'd say the last piece associated with that is still get a lot of questions come in about mortgage rates, and mortgage rates continue to price off of the bond market. Bonds are fluctuating quite a bit over the last 6 weeks, and so mortgage rates have been up and down as well over the last 6 weeks. But it does continue to have, we still continue to have an inverted yield curve, and so when we look at Canada, the 2-year rate in Canada is 4.22, and the 10-year rate is 3.34. So you're 90 basis points inverted. That's material. We've been inverted for about 9 months now, and historically, 9 to 18 months is when a recession happens from an inverted yield curve. So nothing really has changed much. It'll be great to watch, see what the Bank of Canada does and says. But right now, it looks like no rate increase, and let's see what the market and how the market digests that. I'd say the last piece is, equity markets have been really quiet from a fundraising perspective. We haven't seen many companies come to market raising capital. It's been one of the slowest periods that I can remember in my career where companies have come to market to raise. So we'll continue to watch and see if that starts to open up. But right now, it's been super tight.
Gotcha.
Yep.
Okay, no questions thus far. Anything you want to end on? Any news and notes? Any housekeeping comments you want to make?
I don't think so. Specifically, continue to. The one piece which we've started to briefly talk about is just how AI plays a part in the future of the investment world and what we do and what we're looking at. There's a company called C3.ai that had great earnings today. Stock was up about 25%. There is. I've started to face a number of questions about how to get exposure to that and how you might do that. So you know, as we continue to learn, we'll share and educate and give as much information as we can on it. I'd say the last piece on that is we had our president in this week, right? And talking to us about the vision of National Bank Financial, and we've certainly been growing quite quickly. A lot of money's going into helping this business grow. He's an advocate of supporting AI in the system as well, and so we're certainly excited. It was a good meeting with him, and excited about the direction of National Bank from here.
Absolutely. Yeah, it was a really great meeting. Okay, well, at that, I guess we're gonna get started on our weekend. Thanks everybody for joining, and we'll see you next week.
Sounds good. Thanks. Take care.